Trading is risky. Please read the disclaimer and enjoy the video. Hello everyone, this is Mr. Trader, and today we're going to do an advanced ICT analysis of my trade that I took on Tuesday, April 9th, 2024. This trade was taken on a funded account, and we're going to do a top-down analysis of how I entered the market. Starting with the monthly time frame, I'm going to give you 2 seconds to pause the video and note down what you see in the market. Coming back, I'm going to explain what I see. So what I see clearly is that we're in a bearish trend. We're in a long-term bearish trend. We're breaking the lows every single time. And you can clearly see this with trend lines. You can use support and resistance. But anyone can clearly see that we're in a bearish market condition. When we're in a bearish market condition, we're always looking at price to reach premium and then go below the swing point if we're in a bearish condition. That's our ideal circumstance. Zooming in a little closer, I'm going to identify and explain exactly what I annotated and why I did so. Starting with this market structure shift, it broke the slow. It was in a premium area and it broke down. So what am I going to do? I'm going to get the swing point and this swing point, and I'm going to draw a 50% equilibrium level. I'm going to figure out the premium and look for the PD arrays in that premium area. The obvious premium array that I see is this consequent encroachment. So on the 1 month time frame, I marked it out. I marked out where I want the market to go. This is the liquidity point. This is sell side liquidity, and this is what we're going to target in the future. Taking a deeper dive into what I saw coming into this week, I saw this candle. So I'm going to explain this candle in the ways that I saw it. The way I see it is we had this opening, we jolted up, and then we had a swing all the way down. We have a swing down, breaking this low. And then we had Thursday or Friday pushing it back up. We're always trying to find the continuation. We're never trying to call the top or the bottom of the market. Since we're in a bearish condition, I'm expecting this week to also be bearish. And since it already hit this consequent encroachment over here, I'm going to continue to see the market as going bearish. Going on to the weekly chart, I'm going to give you 2 seconds to note down what you see in the market. So what I see in the market is that premium area and we broke the slow. This is the market structure shift that we were talking about in the previous time frame. We know we're bearish, and it broke market structure using this swing point to this swing point right here. We can see that we're in the OTE area, and we can see that it broke market structure, and now we're just looking for more and more sells. Now coming into this week, we can see that there's this fair value gap and this inversion fair value gap right here. Now note this inversion fair value gap. Taking a closer look, I see this market structure shift. On this lower time frame, you can clearly see it compared to the monthly time frame, and we can see that this is an inversion fair value gap plus a fair value gap overlapping right over here. Now, I'm expecting price to hit this and go down to the weekly objective that's right here. And the reason why I chose this as my point of where I wanted to enter the market is because there's CPI. Instead of expecting it to make a continuation lower over here, I expected it to break a high. Now, this is a weekly outlook. Now, my anticipation for the week was that on Monday and Tuesday, we're going to have higher and higher prices. And then on Wednesday, we're going to have a reversal that leads into Thursday and Friday going lower and lower to our weekly objective. Now, Tuesday and Wednesday, those are usually the days which we see a reversal. But I'm heavily leaning towards a Wednesday reversal because there's CPI and there's heavy manipulation. This is an illustration of how I anticipated the market to go. We would start on Monday, we would go lower a little bit, and then we would make the high on Wednesday. We would make the high on Wednesday, we're going to have CPI, and we'd go lower and lower. Moving on to the daily time frame, I'm going to give you 2 seconds to note down what you see. I saw that we had a previous high over here, and I'm expecting it to be violated because a heavy news event is going to occur. I was expecting this high to be broken because it would entice buyers and sellers to enter the market, and injecting liquidity, making price movement on CPI and PMI move faster and faster towards our weekly objective. This is where the market wants to go. Now I'm going to explain where we are in the market maker buy or sell models. As we noted earlier, we're in a bearish market condition. I'm going to mark this as the original consolidation. This was the accumulation that occurred, and this is a smart money reversal. We had one distribution. It went into this fair value gap and then went down. Using this swing point to this swing point, we can find where the point of redistribution is. We can break this high, and after this high is broken, I'm anticipating price to go lower. hitting the original consolidation and sell side liquidity. So coming into the week, I realized that we're in a redistribution cycle of the market maker style model that we're in. Further indication of this occurring is that we have heavy news coming in, and redistribution is usually where low resistant liquidity runs occur. And because it's low resistance, we're going to see fast price movement. And where is fast price movement going to occur? It's going to occur in heavy news events like CPI and PMI. Moving on to the hourly time frame, I'm going to give you 2 seconds to note down what you see on the charts. So this is what I see. It's Tuesday, and this is a previous week high. This is my target before we drop lower. And since it's Tuesday, I want to see Wednesday make a heavy move down. I noted this fair value gap. I saw this fair value gap, and I saw that it didn't hit the previous week high. So my inclination was, okay, we're going to hit this fair value gap and go higher. Now, you can take this trade by itself, but going deeper, we're going to go to a 5-minute time frame for you to see exactly how I entered the market and created a trade that made me a 2RR on my funded account. This is a 5-minute time frame. I'm going to give you 2 seconds to note down what you see in the charts. This is what I saw. Using that 1 hour fair value gap, I realized that within that, there was this 5-minute fair value gap, 7 to 10. Okay, 7 to 12, you can say, but I usually take entries from 7 to 10 just because London close is usually where a reversal might occur. Now, keep a close eye. What else you see here? You see that we broke this low right here. We broke this low and then created this 5-minute fair value gap. What you can also see is that from this swing point to this swing point, you can see that this is an OTE setup. This is where OTE is, and this is where it works. It works after you break low and with confluence of a fair value gap. What I also saw was a market maker model. I saw a market maker buy model that presented itself with its original consolidation happening before the New York Hill Zone. I saw the distribution and I saw the smart money reversal. It's very important that you realize this as an accumulation. This is an accumulation. You might not see it, but price is fractal. You need to be able to identify exactly where the market is making its lows and its highs. On a lower time frame, I'm going to show you a clear description of this entire model. But on this time frame, you only need this time frame to see exactly what was occurring. And this was a reaccumulation. This is where I entered the market. I entered the market because I realized that this is a reaccumulation. This is the perfect time to see a big move going up. This is the market maker buy model that I was annotating beforehand on the 5-minute time frame. You can see it clear on this time frame, but you need to be able to see it on other time frames. This is a skill that gets developed over hours and hours upon reviewing this material over and over again. So you can see the original consolidation here, distribution, smart money reversal, after breaking this low in an OTE in the New York Hill Zone. After that, we have this accumulation, building up of orders, and we have this explosive move going in to a reaccumulation. And the reaccumulation is where we enter the trade for a low resistance liquidity run. As you can see here, the market jolted up after this phase of the market cycle. Now for your homework. We went down from a top-down analysis from the monthly time frame to the 1-minute time frame, but there was more entries. You could have went in from this inversion fair value gap that presented itself here on the 15-minute time frame that I did not discuss, but for your own studies, I want you to see the other ways you could enter this market. Now, for your homework, I want you to look at this fractal right here. What do you see in this fractal? Can you enter this fractal? How would you enter this fractal? Use this 5-minute time frame as the highest time frame you can use to figure out how you could enter the trade that occurred from this swing point to this swing point and to this terminus over here. Thank you for watching this video. I hope it helped you. I hope you enjoyed it. Please like and subscribe. A subscription goes a long way. It's totally free, and it just encourages me to make more and more videos, make higher quality videos. So just hit the subscribe button, comment your suggestions below, and that's it for today. Thank you for watching.